Stock of the day, I thought we'd bring in Treasury Wine Estates in a bid to step up its expansion into the lucrative US luxury market. They are buying a high-end Californian wine group in a deal worth between 1 and 1.6 billion or 1 billion US dollars, 1.6 billion Australian dollars. So it's been put in a trading halt because they're doing a raise for to fund this acquisition as well. Mark Gardner, what do you think of the acquisition and Treasury at the moment?
It had a bit of momentum there prior, obviously with the announcement of the Chinese potentially reviewing that tariff as well. So I think this, and having a look at a couple of these, the stats on this, so the cap raise will be at 1080 a share. They say they're paying
1080.
1080, yeah, which is probably not going to be great in the short term, but they did have a bit of a gap in their portfolio in this $20 to $40 bottle range, and it strengthens their sort of luxury portfolio, which particularly if they get the tariffs reduced to go back into China, that it'll be obviously a very very good thing. It's not because obviously they've only got, they've got Penfolds as their flagship, but these guys, different location, and it's their premier wine's up to $500 US a bottle, apparently.
Because they've got extensive vineyards in the Napa Valley as well, don't they?
It's
a way of, they've got wineries in the Napa, in France, I think in Burgundy, and also in China, so they can get some local wine in the mix, so they avoid paying the excise duties.
Well, that obviously helps as well.
Play.
Yeah, look, I've been really impressed. It was really unfortunate for the company that they got those tariffs hiked on them, but I think it's forced them to be a better business and not just rely on that Chinese export market. So I think the Treasury Wines will come out of this over the course of time a much better a much better business in the next couple of years. So they're
so if the raise is 1080, you would think when it lists again, it would come back to around
it'll
that 1080
come back
mark.
to around there. Yeah.
Will it be reasonable buying at 1080?
I think so. We're a little bit of a precipice at the moment in terms of we've got a lot coming out, end of US earnings season and the Fed and things like that. So it's really difficult to say. If you get a cap raise in the market and you're shut for a week and the market gets hit in that in that period, it's never really a great reopening.
Okay.
Even the likes of CSL when it did the 272, it did dip back below before it pushed back up. So it'll be EPS accredited first year. But this tariff review's 5 months away. So I would be, look, if you've got it, you believe in the business, and you're a long-term holder, you'd be definitely holding on to it, maybe taking up some of the cap raise.
Okay.
If you're fresh money, I think you can probably afford. You can afford to wait at the moment, I think, and go from there. So it's because I would imagine this acquisition's on confidence that those tariffs will be reduced and that market gets opened back up again. So which it does look like doing. So it's but I think you can probably afford to wait.
Right. Okay. And the comparison with CSL's share price there, I think a lot of us would be hoping it would get back to 272. Now at 233. For God's sake.
Since it's been listed, you've had, 6 months of pain versus all of the rest of the time doing well, so it's all relative.
It's had periods of pain before. It's a strong performer over a long period of time, and I think it'll recover.
So asking for a friend who's a bit overweight in his self-managed super fund in CSL, would you...
Yeah, we're adding to $1 averaging.
That makes me feel better. All right, Francesco.
That's okay.
Treasury Wine Estates.
Look, I've never been really a fan of Treasury Wines, and partly because the margins are pretty low.
Right.
And that's because you've got a lot of low-end wineries in there, if you like, so a lot of the mass market.
Yeah.
So I think this acquisition's a step in the right direction because it's premium wines. You're looking at $1 billion. The market cap of Treasury Wine's about 8.6, 8.7. It's quite a large acquisition, so they've got to get it right. they're suggesting that there's EPS earnings accretion in the first year pre-synergies. So with synergies, that's got to add into that a bit. And look, it trades on 23, 24 times. Don't see a great deal of growth in those EPS numbers.
Yeah.
I'd be a hold. If I own it, I'd hold. And I'd probably participate in the cap raising. It's I think one for 9.45.
Right.
So it's not that dilutive. At 1080, it's not much of a discount either, really. I would expect it a little bit more of a discount on that. And there's going to be some new shareholders because there's a bit of a scrip deal built within the acquisition. So, you're looking at 350 million debt, 100 million in scrip to the target organisation. And then about 825 Aussie in the entitlement offer. So it's a big raising too. Look, I'd be still neutral, even with the acquisition and the earnings accretion. At 23, 24 times, still a bit high for me. Their return on equities below 10%, I think, around 8%. So I'd be a hold on that, yeah.
Okay.
Those cost savings are about 20 million bucks apparently across the business. So, and it currently makes about 65 million. So those synergies are a pretty decent chunk. Yeah. So hopefully
and Tim Ford, the boss of Treasury, built his reputation on getting them into the US to start with, didn't he? So he knows that market pretty well.
Yeah, look, I wouldn't have a problem with the market itself. Yeah. And like I said, I think acquiring premium brands is the way to go. I'd like that approach rather than just go and buy another mass market because you're getting better margins on your premium wines.
Sure. Okay.